Hi everyone, my name is Danielle and I am a licensed Canadian CPA. Today we will be reviewing income tax brackets, what they are, and how they work. Canada has a progressive tax system. A common misconception is that the more money you make, the more your entire income is taxed, and that it is better to avoid increasing your income to save on your tax bill. This is simply not true. In Canada, your income is taxed based on what bracket that portion of earned income is in, not the highest level that you have reached. This is called the marginal tax rate, because only the next bit of income is taxed at this new rate. This graph shows the step process of marginal tax rates. Each portion of income is only taxed based on the step, or marginal rate, it is on, represented here as the blue line. The percentages shown in this graph are only for the federal portion of income tax. Provincial taxes will have to be added onto this as well, but they function in a similar way. This chart is just a screenshot from the Canada.ca website showing the federal rates for the tax year 2020 which just ended. This webpage also includes the additional provincial and territory rates, so if you're interested, you can find the website by Googling Canadian tax brackets and going to the first option for Canada.ca. The webpage is called Canadian Income Tax Rates for Individuals - Current and Previous Years. As you can see from the screenshot, it explains the different percentage charged for each portion of taxable income. Taxable income is what's left over after deductions, credits, and the basic personal amount. As you can see from this chart, the first portion is taxed at a rate of 15%, and then each step after that is taxed at a higher rate. Any taxable income over the $214,000 amount is taxed at a rate of 33%. This may just seem like a bunch of numbers and percentages right now, so let's do a couple of examples. In this first example, let's say this is Richie McRich, and he has a taxable income after deductions and credits of $1 million. Using just the federal rates for simplicity's sake, we multiply each rate by the total amount of taxable income for each marginal rate. In the calculations column, we multiply the total amount in between each step by the rate for that row. And then when we get to the last step for a person's income, so the 33% rate in this case, we subtract the total taxable income from the total amount that has already been taxed at the lower rates. When we add the total tax owing column, we get a total of $308,903. This is the total amount that Richie McRich would owe to the CRA, assuming no amounts have been deducted from his paychecks or paid in installments during the year. For the next example, let's say this is Joe Schmo, and he has a taxable income after deductions and credits of $55,000. As you can see from the chart, only two of the tax brackets apply to him. Similar to the previous example, we multiply the total amount in between each step by the applicable tax rate. For the last step, we multiply the tax rate by his total taxable income less the amount that has already had tax applied to it, which is the $48,535. We then total the tax owing column and calculate a total taxes payable of $8,606. Again, he would have to pay this to the CRA, assuming no amounts have been deducted from his paychecks or paid in installments already. And that's it for a basic explanation of income tax brackets in Canada. If you found this video helpful, remember to like the video, comment any other topics you would like me to cover, and subscribe for more future content. See ya!